Hello and welcome. In this video, we will learn about assets and liabilities in detail. Okay. Now, this here is the balance sheet of Reliance, which I have taken from moneycontrol.com. So, you can also go to moneycontrol.com and open up the balance sheet of Reliance or any other company and follow the video. Okay. Now, we have various headings here. We will try to learn some of the headings in this video. Okay. So, we'll start with fixed assets. So, what are fixed assets? Fixed assets are also known as property, plant and equipment or PP&E. Now these are long term assets. Okay, fixed assets are long term assets. These are used in the operations of a business and they are not intended for sale, meaning the company has no plans of selling these fixed assets any time in the future. Okay. Now, what are the things that come in fixed assets? Properties, land, for example, and buildings owned by the company. So, land and buildings owned by the company comes under the head of fixed assets. Machinery, equipment, and tools which are used in the production process, let us say, comes under the category of fixed assets. Office furniture, vehicles comes under fixed assets. Okay, these assets can't be converted to cash quickly, meaning, let us say the company is in a cash crunch and company wants some money in next 2 days, let us say. The company cannot convert these assets into cash quickly because, see, take the example of land. Is it possible for the company to sell its land in next 2 days? Will it be able to get a buyer? Will the company be able to sell the buildings in the next 2 days, or let us say short term, or its machines or vehicles? No, correct? So the assets that cannot be converted to cash quickly can be called as fixed assets. Okay, these assets are expected to provide economic benefits to the company for more than a year. All right, so that is fixed assets. The assets which are for a long term are fixed assets. Okay, next we have current liabilities. Current liabilities are those which the company has to pay to others in the near future. Okay, so that is how I can put it in simple words. Current liabilities are those which the company has to pay to others in near future. Now, what is near future? If you see other videos on the internet, they say under a year. Okay, under a year. Within 1 year, what are the liabilities that the company has to repay or pay, or what are the obligations that the company has? So that those are current liabilities. But what we can use is, a better term would be, in the operating cycle. Okay, so to reframe my sentence, current liabilities are the financial obligations or debts that a company expects to settle or fulfill within the operating cycle. Okay. Now, what is an operating cycle? We'll see this soon. Do not worry about it. All right. Now, what comes under the category of current liabilities? Current liabilities have short term loan repayments. If the company has taken short term loan and it has to pay the interest or it has to repay the loan within next year, within 1 year, or within the operating cycle, then it falls under the category of current liabilities. Okay, anything short term falls under the category of current liabilities. All right, pending salaries and wages, pending salaries and wages comes under the category of current liabilities. Okay, the bills which are yet to be paid, for example, electricity bill, let us say, or garbage disposal bill, or water bill, or any fuel bill which are to be paid, comes under the category of current liabilities. Okay, pending payments to the suppliers falls under the category of current liabilities. Now, what is this supplier? See, let us take the example of company as a production company. Okay, it takes raw materials from suppliers and manufactures goods and sells it to public. Okay, when the company takes raw materials from suppliers, or when the company buys raw material from the suppliers, it has to pay them, correct? So if any payment of such sort is pending, then it falls under the category of current liabilities. Okay, so short term obligations, whatever the company has, that comes under the category of current liabilities. Okay, next, current assets. Current assets, if the company has to get, if the company has to get money, or if the company has to receive money from others, in the near future, in a year or in the operating cycle, then it would come under the category of current assets. Okay, so this we can say is opposite of this. This is the money that the company has to give in the operating cycle. This is the money that the company has to receive in the operating cycle. All right. Now, what are those? Let us say money from inventory. Let us say that the company has raw material in its inventory, and let us say that the company has produced product which is ready to be shipped. Okay, so when it ships, when it sells, it would get money, correct? So that would fall under the category of current assets. Interest from bank. Let us say that the company has deposited money in banks or financial institutions and is expecting interest on the deposits. So if that is there, then it would come under the category of current assets. Okay, in the operating cycle, if the company expects any interest from banks or financial institutions, then it would come under this. Tax refunds. Let us say that the company has paid tax, but then there are some refunds expected by the company, that would come under the category of current assets. Money from clients. Money from clients. Let us say that there are pending money that is to be paid by the clients to the company. Okay, pending money by the clients or consumers yet to come to the company. So that would come under the category of current assets. Okay, I hope it is clear. Next, anything that doesn't come in current liabilities would be considered as other liabilities. Okay, now in other words, other liabilities are the ones which need not be paid by the company in short term. Okay, or in other words, long term liabilities are other liabilities. Okay, so this is how I can put it. Long term loan repayments. If the company has taken a loan and it is for a longer duration of time and the payment is not expected, or the repayment is not expected by the bank in the current operating cycle or in the next year, then it would come under the category of other liabilities. Okay, there are a few more things to be said here, few more things to be added here, but if I say that, it may confuse you, so I will not explain this in too much detail. Okay, next we have deferred revenue. All right, let us say that the company has received payments in advance for the goods or services that the company has not yet provided. Okay, try to understand. Let us say that the company has received payments in advance for the goods or services that are not yet provided, then it would be considered as deferred revenue. Now, this is a liability until the goods or services are delivered. Okay, next, deferred tax. Now, this is the amount that the company will need to pay in taxes in the future. Now, this would arise due to temporary differences between accounting and tax rules. Okay, the company has to pay tax, but not in the near future, that's all. So, that would come under long term liability or other liabilities. Okay, next we have other assets, which is opposite of other liabilities. If there is any money to come to the company after a year or after the operating cycle, then it would be coming under other assets. Okay, for example, long term investments. Let us say that the company has invested somewhere and the returns are to come to the company, but not within a year or not within the operating cycle, then it would be considered as long term investment, or it would come under other assets. Next, let us say that the company has given loan to someone. Okay, it has loaned out money and it is not expecting repayment within this year or within this operating cycle, then it would come under the category of other assets. If the company has given advance, let us say, to someone and it is not expecting it to be repaid in this year or operating cycle, then it would come under the category of other assets. All right, now, apart from these points here and also from the previous slide, there are many other things which come in various headings. Okay, current assets, current liabilities, other assets, other liabilities. I have taken the points which I feel you can relate to. I have taken only those points which I feel you may be able to understand. Okay, so apart from these, there are various other points or various other sections which are under various headings. Okay, as you proceed through your journey of fundamental analysis, as you watch other videos, maybe from different YouTube channels too, you will be able to relate with them. Okay, right now this is sufficient. It is enough to know what are current liabilities, other liabilities, current assets, other assets, and fixed assets. Okay, now let us try to understand what an operating cycle is. Okay. To give you, to make you understand the concept, I will take an example. I will take a personal example of salary and expenses. Okay. Let us say that my salary is 30,000 rupees per month. Okay. This is what I'm getting from my company on the first of every month or in the first week of every month. So this is my asset. Okay, this is my asset. My asset. So this may be or this is a liability to the company. Okay, do not worry about that. I'm taking my case now, my personal case. For me, this is asset. All right. Now, from this 30,000 rupees, I have to manage expenses and other things. Now, what are expenses? Let us take few examples. Let us say that I have the money of milk to be paid. Let us say that I buy milk and I pay them once a month. So I have to pay the previous month's bill now. Okay. Let us say that I buy newspaper. So newspaper bill is pending. I have to pay that. Last month's electricity bill is pending. I have to pay that. And other bills. Let us say water bill is there. I have to pay water bill. Let us say I am living in a rented house. I have to pay the rent and last month's rent I have to pay. And let us say that all those adds up to 10,000 rupees. Okay, all the bills and expenses adds up to 10,000 rupees. My salary is 30,000 and my expense is 10,000 rupees. Let us say I have paid everything. The remaining 30,000 minus 10,000, 20,000 rupees is called as working capital. Working capital. And with this 20,000 rupees, I have to manage current month. Meaning, if I get salary on first of the month, I have to manage it till the end of that particular month. Okay. So that would be my operating cycle. Okay. I have to manage with this for the current month. Now, what do we do with this? What do we do with this? Let us say I go to office daily in my bike. So I have to fuel it, correct? So petrol is needed. So from this, I will be filling the petrol. I need groceries for my house to cook, to eat. So I buy groceries from this. And there may be some unexpected bill or expense which I have to try to manage from this. So working capital will be used to sustain the current month. Okay. So current month is my operating cycle. Why is current month operating cycle? Because I'm going to get my next salary at the end of current month or beginning of next month. So until I get my next salary, it would be considered as operating cycle. Okay. Yes. Now apply the same thing. Apply the same thing for a company. For a company. All right. So we have current assets here. We have current liabilities here. Current assets minus current liabilities is working capital. Okay. Now let us try to understand what these are. Current assets. You know what these are. I just explained. Let us say that current assets of company is 30,000 crore rupees. So this was my salary. So it was in rupees. So when we talk about company, it would be in crores. So let us take the same figure to keep it simple. So let us say that current assets is 30,000 crore rupees. And current liabilities is 10,000 crore rupees. Okay. 30,000 crore rupees is what the company is getting. 10,000 rupees is what the company is paying to others. 30,000 minus 10,000 would be 20,000 and that would be the working capital of the company. And that would be the working capital for the current operating cycle. With the 20,000 crore rupees, it has to manage day to day operations. Okay, now what is the operating cycle here? See, every company has different operating cycles. That is why I told you for a year to keep it simple. Okay, now let us say that on January 1st, the company gets money. That would be its current assets. Now, where would it get its money? Where would it get the money from? See, the company provides service or goods, correct? Company procures raw material, produces goods, packs it, ships it, sells it. That is how the company gets money. Let us say that from the previous sales, the company has received money. That would be the current assets. Okay, previous sales money would be current assets. And let us say that on January 1st, just for the sake of example, on January 1st, it has received money from sales from previous cycle. That would be its current assets, and let us say that is 30,000 crore rupees. From that, the company pays 10,000 crore rupees to others. All right, and remaining 20,000 would be the working capital. Now, let us say that the company should operate 4 months: January, February, March, and April. Okay, meaning using 20,000 crore rupees, the company has to manage day to day operations for the next 4 months: January, February, March, and April. Meaning on May 1st, or in the first week of May, or in May, the company would be receiving money for the goods that are sold from this operating cycle. Okay, so in January, February, March, and April, company would be producing goods and it would be selling to the public. It should receive money, correct? So let us say that it would receive its money in May 1st. So that would be its operating cycle. So from January to May or April would be its operating cycle. From the day money comes to the company till the day the money comes to the company, once again, it is considered as working capital. Mine is first of every month. I get money this month first, I get money next month first. So that would be my operating cycle. Here the money comes to the company January 1st, and once again it comes to the company on May 1st. So January to May would be the operating cycle. Alright, I hope it is clear. So January to May was just an example, it would be different for different companies. Okay, now, so this is a balance sheet. If you see current liabilities here, it is this many crores. If you see current assets, this many crores. So you can see that current assets is more than current liabilities, meaning that the difference of this and this is working capital. This should be more than this for the company to operate. Okay, if this is less and this is more, then the company has to borrow loans, because money coming in is less, my salary is less, but my expense is more. Then what will I do? I have to take a loan, correct? So asset must be more than liabilities. Okay, so I hope the concept is clear. I hope now you know what fixed assets, current assets, other assets, current liabilities, and other liabilities are. Alright, so that's it for this video. I'll see you in the next video. Till then, take care and thank you for watching.